Listen up, because this is important. The financial world is changing. New tariff policies are shaking things up. These aren't just numbers on a spreadsheet, they have real consequences. One of the biggest impacts? Gold. Yes, gold. That shiny metal your grandma loves, it's about to get a whole lot more valuable. Why? Because gold thrives on uncertainty. And tariffs? They bring uncertainty in spades. Buckle up, folks. We're in for a wild ride. Remember when I said tariffs bring uncertainty? Well, that uncertainty makes investors nervous. And when investors get nervous, they run for the exits. But they don't just leave their money lying around. No, they look for a safe haven. A place where their money is protected. And that safe haven? You guessed it, gold. Now, I'm not saying you should sell your house, your car, and your kids' college fund to buy gold. This isn't about getting rich quick. This is about protecting your hard-earned money. It's about having a plan when the markets go haywire. And trust me, with these tariffs, the markets are going to go haywire. So, what are you waiting for? Get informed, talk to your financial advisor, and consider adding a little gold to your portfolio. It might just be the smartest move you make all year. Hold on to your hats, because the predictions are in, and they're big. We're talking about gold prices soaring to heights we haven't seen before. Forget $2,000, forget $3,000, some analysts are even whispering about $5,000 an ounce. That's right, 5,000. Now I know what you're thinking. Jim, are you feeling alright? Did you accidentally eat a bad bagel? Listen, I'm not saying these predictions are set in stone. The market is a fickle beast. But when big names like Goldman Sachs, UBS, and Bank of America start throwing around numbers like that, you better believe people are listening. These aren't your average Joe Schmoes on the street corner. These are the titans of finance, and they see gold going through the roof. Now, some folks are more bullish than others. Jeff Gundlach, the bond king himself, is predicting $4,000 an ounce. And let me tell you, when Gundlach talks, people listen. The man's a legend. So, what does this all mean for you? It means that now is the time to pay attention. The gold train is leaving the station, and you don't want to be left standing on the platform. Remember those tariffs we talked about? Yeah, they're not going away anytime soon. In fact, they're only adding fuel to the fire. See, tariffs create a nasty cocktail of volatility, inflation, and uncertainty. And guess what thrives in that kind of environment? You guessed it, gold. Volatility makes investors nervous. They see the market swinging up and down like a roller coaster, and they want out. They want stability. They want something that won't lose its value overnight. And that's where gold comes in. Then there's inflation. When prices go up, the value of your money goes down. It's like trying to run up a down escalator. You work hard, but you're not getting anywhere. Gold, on the other hand, has intrinsic value. It's a tangible asset that has been desired for centuries. And let's not forget about uncertainty. The trade war, geopolitical tensions, those are all big question marks hanging over the global economy. And when people are uncertain, they flock to gold. It's a safe haven, a hedge against the unknown. So, there you have it. Tariffs, volatility, inflation, uncertainty. They're all playing a part in driving up the price of gold. Let's face it, the world's a crazy place right now. Trade wars, political turmoil, you name it, we've got it. It's enough to make even the savviest investor want to bury their money in the backyard. But before you start digging, there's a better option. Gold. Gold has been a safe haven for centuries. When everything else is falling apart, gold stands strong. It's the one constant in a world of uncertainty. And in times like these, that's worth its weight in, well, gold. Think about it. Stocks can crash, bonds can default, even real estate can lose value. But gold has intrinsic value. It's a physical asset that people have always desired. It's a hedge against inflation, a store of value, and a safe haven in times of crisis. Now I know some folks think gold is boring. It doesn't have the same excitement as a tech stock or the potential for quick profits like a meme stock. But you know what? Boring is good. Boring is reliable. And right now, reliable is exactly what we need. So, if you're looking for a safe haven in this stormy market, look no further than gold. It's been a safe bet for centuries, and it's not going anywhere anytime soon. Section 5. Geopolitical tensions, adding fuel to the fire. We've talked about tariffs, inflation, and uncertainty. But there's another factor driving up the price of gold: geopolitical tensions. And let me tell you, things are heating up around the world. We've got conflicts brewing, saber rattling, and enough posturing to make a peacock blush. It's a recipe for disaster. And guess what benefits from disaster? You got it, gold. Think about it. When countries are on the brink of war, investors get nervous. They pull their money out of risky assets and look for a safe haven. And what's safer than gold? It's tangible, it's portable, and it's universally recognized as a store of value. Take the situation between India and Pakistan, for example. Those two nuclear-armed neighbors have been at each other's throats for decades. And recently, things have escalated to a boiling point. Investors are rightfully concerned, and they're turning to gold as a hedge against potential conflict. This isn't just about India and Pakistan. We're seeing geopolitical tensions flare up all over the world. From the South China Sea to Eastern Europe, the world is a tinderbox right now. And any one of these conflicts could ignite a global crisis. In times like these, gold is more than just a precious metal. It's a hedge against uncertainty, a store of value, and a safe haven in a world teetering on the brink. Section 6, From Jewelry to Cash, the growing demand for physical gold. Alright, let's talk about demand, because when it comes to gold, demand is through the roof. I'm not just talking about investors buying gold ETFs or futures contracts. I'm talking about people all over the world wanting to get their hands on physical gold. We're talking bars, coins, even melting down old jewelry. People are waking up to the fact that gold is real money. Now I know what you're thinking. Jim, people are melting down their jewelry. Things must be really bad. And you know what? You're right. When people are desperate for cash, they turn to what they know holds its value. And that's gold. But it's not just about desperation. People are buying gold because they're losing faith in the system. They see governments printing money like it's going out of style, and they know it's only a matter of time before inflation eats away at their savings. So they're turning to gold as a way to protect their wealth. And let's not forget about central banks. Those guys are buying gold hand over fist. Why? Because they know what's coming. They see the writing on the wall, and they're preparing for a future where gold is king. So what does this all mean? It means that the demand for gold is only going to increase. And as demand increases, guess what happens to the price? You got it. It goes up, up, up. Section 7. The dollar's dance, how it affects the price of gold. Now let's talk about the dollar, because the greenback and gold have a complicated relationship. They're like that old married couple that's always bickering but can't live without each other. When the dollar is strong, gold tends to weaken. And when the dollar weakens, gold shines. It's all about supply and demand, folks. See, gold is priced in dollars. So when the dollar is strong, it takes fewer dollars to buy an ounce of gold. That makes gold less attractive to foreign buyers, and demand goes down. But when the dollar weakens, it takes more dollars to buy that same ounce of gold. Suddenly, gold becomes a bargain for foreign buyers, and demand goes up. Now, guess what's happening to the dollar right now? That's right, it's getting hammered. With all the uncertainty in the global economy, investors are losing faith in the greenback. And as the dollar weakens, gold is looking more and more attractive, so keep an eye on the dollar. If it continues to weaken, expect the price of gold to keep rising. It's all part of the dance, folks. The dollar leads and gold follows. Section 8. Stocks stumble, gold shines brighter. Let's be honest, the stock market has been on a tear for years. It's been a bull market for the ages. But what goes up must come down. And when the market finally corrects, it's going to be a doozy. But don't worry, there's a silver lining. Gold. See, gold and stocks tend to move in opposite directions. When the stock market is booming, investors are feeling confident, and they're less interested in safe haven assets like gold. But when the market takes a nosedive, investors get spooked, and they start looking for a place to park their money where it's safe. And where's safer than gold? Now, I'm not saying the stock market is going to crash tomorrow. But let's be realistic, it's due for a correction. The fundamentals just aren't there to support these valuations. And when the market does correct, gold is going to be there to pick up the pieces. So, if you're worried about a stock market crash, adding some gold to your portfolio is a smart move. It's a hedge against uncertainty, a store of value, and a safe haven in a storm. Section 9. Navigating the gold rush strategies for today's traders. Listen up, because this is important. Gold is hot right now, but that doesn't mean you should go all in and bet the farm. Investing in gold is like riding a bucking bronco. You need to be smart, you need to be strategic, and you need to hold on tight. First things first, do your research. Don't just buy the first gold ETF you come across. Understand the different ways to invest in gold, from physical bullion to mining stocks to gold ETFs. Each has its own risks and rewards. Next, keep an eye on the news. Gold is sensitive to economic data, geopolitical events, and even rumors and speculation. Stay informed and be prepared to adjust your strategy accordingly. And remember, don't put all your eggs in one basket. Diversification is key. Gold should be a part of a well-rounded portfolio, not your entire portfolio. Finally, be patient. Investing in gold is a long-term play. Don't expect to get rich quick. But if you're patient and strategic, gold can be a valuable addition to your portfolio, so there you have it. Gold is on the rise, the stars are aligned, the fundamentals are strong. But remember, investing is a marathon, not a sprint. Be smart, be strategic, and hold on tight.
If you like this video, please like and subscribe to the channel.